What if a digital currency wipeout could injure, or even worse, destroy the entire cryptocurrency ecosystem? Lately, there's been more focus on stablecoins, which are undoubtedly the quiet power players of the cryptocurrency space. And it seems like everyone's been asking the same question. How stable are stablecoins? Tether in particular has found itself under great scrutiny lately after claiming its stablecoins were fully backed up by dollars. In this video, I'll take you back to where it all started to have a clear picture of why the stablecoin giant Tether has been hit with a $41 million fine in the latest crypto crackdown. Meanwhile, welcome back to ICE, where you get to learn all the ins and outs of investing, e-commerce, and entrepreneurship. If it's your first time here, be sure to hit the subscribe button and leave us a like below. So let's get these facts correct before moving on. Tether is the third biggest cryptocurrency in the world by market value. And it's no surprise that some economists have been raising questions about this digital token as a possible systemic risk to the cryptocurrency ecosystem. Back in June 2021, Boston Fed President Eric Rosengren raised the alarm about Tether, calling it a potential financial stability risk. Mr. Rosengren served as the 13th president and chief executive officer of the Federal Reserve Bank of Boston until his retirement in September of 2021. The issues surrounding Tether hold significant implications for the ever-growing cryptocurrency world, and economists increasingly fear that it could also impact markets beyond digital currencies. First and foremost, here's what you need to know about this digital token called Tether. What is it? Chances are you've heard a thing or two about Bitcoin, Ethereum, Cardano, or maybe even own a few of these cryptocurrencies. But what about Tether? Like Bitcoin, Tether is a cryptocurrency. In fact, it's the world's third biggest digital coin by market value, but it's very different from Bitcoin and other virtual currencies. You see, Tether is what's known as a stablecoin. Stablecoins are digital currencies that are tied to real-world assets, the US dollar for example, to maintain a stable value, unlike most cryptocurrencies which are known to be volatile. Bitcoin, for example, rose to an all-time high of nearly $65,000 in April and has since struggled until only in early October when it hit the $60,000 mark once again. Tether was designed to be pegged to the dollar. While other cryptocurrencies often fluctuate in value, Tether's price is usually equivalent to $1. This isn't always the case though, and wobbles in the value of Tether have spooked investors in the past. Of course, you might have heard that crypto traders often use Tether to buy cryptocurrencies as an alternative to the greenback. This essentially provides them with a way to seek safety in a more stable asset during times of sharp volatility in the crypto market. However, remember that crypto isn't regulated, and many banks avoid doing business with digital currency exchanges due to the level of risk involved. Now that's where stablecoins tend to come in. Typically, when someone sets up a stablecoin, there's a reserve for the assets, which are held as collateral. Some stablecoins are centralized as well. With cryptocurrencies like Bitcoin or Ethereum, if your wallet is hacked and you lose all your money, or well, let's say cryptocurrencies, then there's nothing someone can or will do about it. In that case, well, sorry, you simply messed up. But this isn't the case for some stablecoins. For example, when $600 million was stolen from Poly Network, Tether simply froze the $33 million of its tokens that were included in the heist. So that rendered those funds useless to the attacker. So why the controversy? Some investors and economists have long been worried that Tether's issuer doesn't have enough dollar reserves to justify its dollar peg. On the flip side, on August 9th, Tether put out an attestation about its reserves, a way of reassuring users that the most popular stablecoin is, well, stable. In May, Tether broke down the reserves for its stablecoin. The firm revealed that only a fraction of its holdings, 2.9% to be exact, were in cash, while the vast majority was in commercial paper, a form of unsecured short-term debt. That would place Tether in the top 10 biggest holders of commercial paper in the world, according to JP Morgan. Yup, JP Morgan is an American multinational investment bank and financial services holding company headquartered in New York City. Fined. Tether Limited, the largest stablecoin issuer, agreed to pay a federal regulator a $41 million penalty on October 15th. This is the latest result of the Biden administration's broader crackdown on cryptocurrency markets. The federal agency said that from at least mid-2016 to February 25, 2019, Tether misrepresented to customers and the market that it held US dollar reserves in bank accounts for all its stablecoins, dubbed USDTs, in circulation. Okay, do you know the value of Tether's stablecoin that's in circulation today? With an estimated $68.6 billion worth of tokens in circulation, Tether has more deposits than many US banks. Back to the federal agency. Here's the reality. Tether held equivalent dollar reserves in its accounts for only 27.6% of the days in a 26-month sample period. Well, Tether neither admitted nor denied wrongdoing as part of its settlement with the CFTC. The stablecoin giant said on October 15, 2021, that the investigation focused on its past operations and that it had corrected the issues involved when it updated its terms of service in February 2019. Of course, the biggest question everyone has been asking is what's backing Tether? In 2014, it was originally called Realcoin. The idea was that it would be backed by the US dollar on a one-to-one basis. For some time, the website read that every Tether is always backed one-to-one by traditional currency held in our reserves. In February 2019, this text changed and read that every Tether is always 100% backed by our reserves, which include traditional currency and cash equivalents, and from time to time may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities or rather collectively reserves. Also in the past statement, Tether said that this inquiry arose during a markedly different time in the ecosystem and focused on the same types of challenges that many in the industry faced at the time. And just like many companies around the world do, Tether agreed to resolve this matter to move forward and focus on the future. Talking of the future, what do you think the US authorities hold in store for stablecoins? Let us know your thoughts in the comments below. Are you enjoying this video? Take a second to hit the like button and subscribe to this channel for more insightful videos. So it seems like there will be more of scrutiny from authorities. US regulators are ramping up scrutiny of stablecoins over concerns that they could threaten financial stability. Yep, the Biden administration is indeed considering ways to impose bank-like regulations on stablecoin issuers, including by pushing them to register as banks. This isn't the first time that Tether has found itself on the wrong side of the law. In fact, its October 15 agreement with the CFTC was the firm's second settlement with US authorities related to misrepresentations about its reserves. Earlier this year, the New York Attorney General's office reached an $18.5 million settlement with Tether and the Bitfinex cryptocurrency exchange following a 2-year investigation. Bitfinex was also included in CFTC's settlement and agreed to pay $1.5 million for allegedly carrying out illegal transactions and operating as a futures exchange without registering with the agency. According to the CFTC, Tether held its reserves in unregulated entities and third parties rather than in dollars as promised, something every other person in the crypto world has been asking for quite a long time now. Among the entities was an unlicensed money transmitting business in Panama. The CFTC revealed that starting August 2018, Tether held reserves in financial products such as commercial paper and bank repurchase agreements. Besides, it sometimes included unsecured receivables and expected wire transfers when calculating reserves. On the contrary, since April 2015, Tether has also stated in a document on its website that it undergoes regular professional audits. But the CFTC also challenged this claim, saying that, to date, respondents have not completed an audit of the Tether reserves. For now, we can only wait and see what lies ahead for the stablecoin giant. Perhaps you should know that Tether has for a long time been compared to traditional money market funds, but without any regulations whatsoever. But this is something that will most likely be of higher interest to the US authorities in the coming years. That's all for this video. Once again, let us know your thoughts about the company behind Tether and how it will likely fare in the market after being hit by the $41 million fine in October. If you enjoyed watching, feel free to give us a big thumbs up, subscribe, and turn on your notifications alert for more updates. See you in the next one.